Welcome to your monthly market report for November of 2022. My name is Kate Rezebeck, and today David Childers and I are going to walk you through several of the most important topics we can be talking about in the housing market right now. We're going to give you the latest update on mortgage rates and prices, something we're following very closely in today's housing market. We're also going to bring you the latest we have on foreclosures. This is a big question that people have right now around foreclosures and what that looks like in this country. So we're going to bring you the latest on that today. And we're going to wrap by answering or helping you answer the question, should I buy a home right now? A lot of clients and buyers are asking, is this a good time to buy a home? And while everyone moves through that process at a different pace for different reasons, we want to help you answer that question. So I'm going to kick off today with a quote from Donald Miller, who is the author of Building a Story Brand, a book that we've read and certainly learned quite a bit from over the years. And it says, people do not follow the best leaders. They follow the ones they can understand the easiest. This is exactly the essence of what we're talking about. It's so important to bring clarity, bring facts, bring vetted research, and help your clients understand in the most simple and effective way what is happening in the housing market so they can make the best decisions. And that's where your relevant market opinion based upon fact comes into play. So hopefully we're going to be able to help you formulate that today, bring you the data, bring you the insights so you can have that relevant market opinion based upon facts and be the expert that your clients truly need in this market. So I'm going to start today with an update on mortgage rates. And the big question, will mortgage rates keep rising? So let's start with a graph that you've certainly seen us share before. And it says mortgage rates are rising this year. This is the Freddie Mac 30-year fixed rate from January of 2022, so very beginning of the year, through where we are today. And of course, this is a look back. So this was released at the time of this recording, right in the beginning of November. And what we can see is mortgage rates have been climbing drastically this year. This is what we've all been feeling. Look at that steep incline. And, they even ticked up over 7% over the past couple of weeks. And, that's causing the cool down in the market. That is causing people to pause their plans, say, hey, I'm not really sure that I want to buy right now. Some people are being priced out of the market. We're seeing all of this happen. Mortgage rates have actually, if you look at this graph, they have more than doubled in this year. That has never happened before in a calendar year. So really important that we keep our eyes on mortgage rates. And the pain that people are feeling is because they're rising so fast. It's not necessarily just about that 7% number that we're starting to see them tick around. It's about the rapid rise. And I think this quote really from Freddie Mac really says it well. It says, U.S. 30-year fixed mortgage rates have increased 3.83 percentage points since the end of last year. That's the biggest year-to-date increase in over 50 years. So that's certainly making people press pause. It's making them question their plans. And as the market expert, it's important to help clients understand, why is this happening and what do we experience, what do we expect going forward? And I think at the end of the day, we've been saying this for a while now, is this is all about inflation. So take a look at this quote from George Ratu from Realtor.com. It says, with inflation still running at a 40-year high and the Fed expecting a few more rate increases to combat it, mortgage rates will experience upward pressure through the end of 2022. So why is that? That's because the Federal Reserve is making moves to raise the federal funds rate. They're trying to lower inflation. They're trying to slow down the economy. And in doing so, they don't call mortgage rates, but mortgage rates tend to respond. And that's exactly what's happening. It's what we've been saying, for the bulk of the year now, is that while inflation is high, mortgage rates are going to remain high. So we're seeing that expected upward pressure through the end of the year. Now, the good news is, and I think this says it well, this is Mark Fleming from First American, says, while mortgage rates are expected to continue to drift higher over the coming months, much of the rapid increase in rates is likely behind us. So we're not talking about mortgage rates doubling again. Mortgage rates are feeling that pressure. The Fed is making active moves to lower inflation. mortgage rates respond. We're still seeing high mortgage rates, but we're not expected to see this exponential increase as we continue to go forward. So, as we start to see the Fed making moves to lower inflation, to really kind of get this under control and to, see what's happening in the economy around us, the question starts to come into play, what about a recession? That's the next thing on the radar, is what happens. Is there a recession around the corner? And this data from the Wall Street Journal is really helpful. And it is a survey where the Wall Street Journal asked economists, what are the chances of a recession happening in the next 12 months? And we've been following this all year. And you can see over on the left side of your screen, in January of 2022, about 18% of economists said, I think we're going to see a recession over the next 12 months. Well, as the inflation has stayed high, we've seen economic pressures in the world around us, we've seen the housing market change, that percentage of economists who are expecting a recession over the next 12 months has continued to increase. And the latest data released in October shows that 63% of economists feel that there's going to be a recession sometime over the next 12 months. And this is reflective of where we've seen the economy go over the past year. And it starts to spark the question, what does that mean for the housing market? And so as we look at the housing market, there's a lot we can learn from history. And you've seen us share this graph before, but let's keep in mind that a recession does not mean falling prices. Okay, so in 4 out of the last 6 recessions in this country, home prices actually increased. Now, we all remember the housing crash in 2008. And I think that's fresh in our minds, and people are fearful of that. But what we have to remember is we have a very different landscape right now when it comes to inventory, when it comes to lending standards, equity, all of the factors that are driving the housing market in a different direction. Now, what this graph does not mean is that we won't have falling prices, but it does mean that it doesn't happen every time. So when we think about what happens in the housing market, if a recession is in play, we have to put this context together. And I think one thing we can also learn about what history tells us is that a recession more likely means falling mortgage rates, because in those same 6 recessions, mortgage rates have dropped each time this country has seen a recession. So when we really think about how does this impact the housing market, it's more important than ever to help your clients understand, share these visuals, help them understand, what does history tell us? We're going to have to see how this plays out. We're going to have to see what happens with inflation, what happens with mortgage rates. We're going to talk about prices in just a moment as well. But it doesn't always mean that prices will fall. And of course, you can see here that traditionally mortgage rates have come down. So they've risen very dramatically. And what history shows us is that at some point they turn. So that's what we're keeping our eye on. And we're continuing to help you communicate to your clients, because, again, a lot of fear, a lot of uncertainty when you start to say recession in the housing market. Now, I want to talk next about what experts are saying about home prices, because I think this is another big question on everyone's mind, and certainly something that we want to help you answer. We're continuing to bring updates on home prices, very regularly, because this is a dynamic that is changing. We've seen mortgage rates rising, and that is easing kind of the fury and the frenzy that we've seen in the housing market. But what does that mean for prices? So let's take a look at this quote from Redfin. It says, for those bearish folks eagerly awaiting the home price crash, you'll have to keep waiting. As much as demand is pulling back, supply is as well, and that's reducing downward pressure on prices in the short run. So what does this mean? This means houses are staying on the market longer. We're not seeing an influx of new listing. It is still a seller's market. And what we know is that prices are driven by supply and demand, and this is continuing to put upward pressure on home prices. However, it's also giving more opportunities for buyers. So we're seeing that shift in the market. Now, I want to bring you the latest update we have on the home price forecast for next year, because this part is changing as we continue to have this conversation. So, we like to look across the board at several different experts and kind of average them all out so you can see the full picture here. What you can see here is that some experts are projecting a little bit of appreciation next year. That's what you see in those blue bars, anywhere from 0.7% to 2.6% appreciation. We have other experts that are projecting slight depreciation. So it really is kind of it's scanning it's a it's across the board, a little bit up, a little bit down, depending on how experts are looking at it. And this is where layering in that local data becomes more important than ever. Because what we're feeling right now is some of those overheated markets where prices went up so rapidly during the pandemic are starting to see more of a shift in prices than some of the other markets that may be holding steady. When we average these out across the year, roughly neutral, flat home price appreciation for 2023. But it's certainly something we're going to continue to keep our eyes on as we go forward. This is where layering in that local, what's happening with supply, what's happening with demand in your market helps define where prices are headed in your local area. Now, I want to share another perspective of this because big banks are projecting more depreciation in 2023. So, Goldman Sachs, Wells Fargo, Moody's, Morgan Stanley, you can see that they're shifting more towards, we may see some slight depreciation next year. And, it's a little bit different because some of the big banks, they follow more of those publicly traded builders versus some of the organizations that follow more existing homes. And so big banks are calling for more depreciation based on that new build type of environment versus existing home organizations saying more appreciation. But what's most important and where they all really tend to agree, and this is data from Wells Fargo that I think really positions this well, is that 2023, maybe a little bit of depreciation, maybe a little bit rocky next year. But as we come into 2024 and beyond, returning to more normal levels of home price appreciation. And as we continue to look forward, as we look at things like the home price expectation survey saying more normal appreciation in the years ahead, all of that dependent on supply and demand. And, while inventory is still historically low, we will continue to see that in the years ahead. But 2023, maybe a little bit of depreciation, maybe a little bit more neutral. That's really kind of the bottom line that we're seeing here. And a lot of that has to do with perspective and what you communicate and how your clients look at it. And I think this quote from Freddie Mac really says that well. It says, well, there may be a little statistical difference between a small positive number and a small negative number. So talking about some appreciation, some depreciation. There are often huge differences in how they impact behavior. So how your clients look at this and what they anticipate will happen in your local markets may really drive behavior. So you being that expert, being able to share the data, share the insights on what's truly happening both nationwide and in your local area, more important than ever, because that's really going to be the clarity that people need in this message. What we also know, especially as we look back in time, we had, the great financial crisis. There were 5 years of continued depreciation. No one is calling for that extended long period of depreciation right now. Little rocky next year, and then returning potentially to more normal levels of appreciation. So we're not talking about this long financial crisis ahead of us. We're talking about some up, some down next year, and then back to more normal levels as we look nationally at that perspective across the board, moving into a much more stable environment. So, with that in mind, as always, layer in what's happening in your market with inventory, with demand, with all of those things that can impact what's happening in your neighborhoods, and then really kind of help your clients understand the bigger picture of what's happening in the world around us, in the markets around us. And I think as we start to talk about prices, about mortgage rates, about all of these things that are in play, the next big question that comes up is, what about foreclosures? And David's going to walk you through our update here.
All right, thanks, Kate. Well, we've talked about interest rates, we talked about prices, what Kate just went through. I want to sort of shift the conversation to a couple of things that I think are important right now as we have that conversation. One is what's happening with foreclosures, and I'm going to break that down for just the next few minutes. And then sort of end this with the question that I think is on a lot of people's minds right now, and that is, should I buy a home? One of the questions being asked of many of us, and certainly anybody that's in our business, that critical question and being able to answer it. I think the first two topics of interest rates and prices are critical in answering that question. But we're going to sort of discuss that as we wrap up. But what about foreclosures? Let's kind of start here, and I'll maybe position the statements with this graphic here. This is foreclosure activity by year from Adam Data, and it goes all the way back to 2005. And something very interesting right here. If you look at this graphic, ever since 2010, foreclosures have decreased in this country. And, there's a reason for that. Coming out of the financial crisis of 2008, lending standards became a lot stricter. We've talked extensively about that on the monthly market report. And, as you have a better qualified borrower, stricter standards, you have less defaults. The bars in red here when, distressed properties or foreclosures in this country were over 1 million units in the year. And every year we've seen less and less foreclosures. And even if you take 2020 and 2021 off the map because they're anomaly years, we've seen that happen. So the question really becomes, are we about to see a bunch of foreclosures coming to the market? And what's the update on that? And I will tell you, even though I'm not going to cover it today, one of the leading indicators of that is delinquencies, and delinquencies are down right now. But if we look at foreclosures, Adam Data says this: only about 214,800 homeowners were facing possible foreclosure in the second quarter of 2022, or just 0.4% of the 58.2 million outstanding mortgages in the U.S. And this is 0.4% of 1%. And if you think about that, this is a number that if you were to sit down with a servicer or somebody in the mortgage business that's in the side that looks at foreclosures in a portfolio of mortgages, they would generally tell you they're okay with about 1% default rate in a portfolio. Well, where are we at? We're less than half of what they're even okay with in a scenario, a normalized scenario. Foreclosure is very, very low. And oh, by the way, if you continue reading this, of those facing foreclosures, about 195,400 or 91% had at least some equity built up in their homes. Now, people do get foreclosed on that have equity in their homes, but the bottom line is people have options. They can sell their home, put some money in their pocket, and sort of move to the other side of the financial crisis they and their family have faced. But if we continue this, even updated here in the third quarter, Rick Sharga said this: anyone waiting for a huge foreclosure wave will probably be disappointed by this report from Adam Data. Foreclosure activity was flat from Q1 to Q2, and foreclosure starts dropped slightly from August to September. So this is a quote from Rick. We follow Rick and certainly trust Adam Data and everything they're doing. And yet the report that then came out from Adam Data had this as the headline: U.S. foreclosure activity continues to increase quarterly, nearing pre-pandemic levels. So more than the pandemic, factually correct, but maybe misleading for somebody that reads this and doesn't dig deeper like you are here on the monthly market report. This market is a critical market to go beyond the headline into really what are they saying, because oftentimes they're very, very different than maybe what we're led to believe. But the bottom line is there's not this pent-up demand of foreclosures coming. We've been talking about this, and if you're watching the monthly market report or followed this report, then that. I think we need to still get this message out there. And people wonder, well, are we about to see a wave of just inventory hit the market? Well, this is a look at the end of October as we're recording this, and where is housing supply at? If we look at the same week in 2021. We're up almost 40%, 39.5%, up over 2020, slightly 6.3%, but down over 2019, just over 37%. So, 2019, we often say 2017, 2018, 2019, the normal years in the market before we went into COVID and everything that we know that brought as the anomaly of real estate in this country. So not only are we not seeing this wave of foreclosures come, we're not seeing a wave of inventory hit the market. Certainly more than last year, certainly more than the year before. But if you look at prior to COVID, we are still down across the country in available inventory. I think this leads into this question that I sort of teased out before, and the question is, should I buy a home right now? And I think on top of many people's minds is that question, whether you're in the business and do you know how to answer that, or you're thinking about buying a home and you're going, hey, I'm reading the headlines or I'm seeing what's out there. I know interest rates have shot up and I'm not sure I should buy a home right now. Kate started off talking about the dramatic rise in interest rates we've seen this year in the real estate business, dramatic rise in mortgage rates. There's two things everyone should consider when they're thinking about buying a home. First question is, what do I believe about mortgage rates? Kate just gave us that. What do I believe about home prices? Kate just gave us that. And then I'm going to form my relevant market opinion based upon that to help somebody answer an extremely personal question. If they want to wait and it's the best thing for them, we want to help them do that. But we want to educate them on what's happening, certainly nationally, but also with our local market expertise and information. But here's the bottom line. What's the alternative? The alternative is renting. And this slide right here shows the median asking rent going all the way back to 1988. And you've seen this before on the monthly market report, but rents across the country have skyrocketed. I think right now our job in this business is to understand and know what a 2-bedroom, 3-bedroom apartment where we live, what it rents for. If you don't know that right now, I'd get on the phone and I would find that out. What's a house renting for? You may know that or have seen that out in what's out in the market, but understanding where rents are at, and maybe you think but I would call right now because they're going up. No doubt, rental inventory is impacted by supply and demand, just like housing is, and we're seeing that go through the roof. But the bottom line is if you're in the rental trap and you're sort of paying through the nose for your rent, then you can't afford to save for a down payment. You can't afford to get into a home, which then allows you to build wealth over time. And we know that home ownership wins. We maybe get focused on it, and I'm not saying we shouldn't be focused on it, of a 7% interest rate, or we get focused on prices. And there's certainly people that have been priced out of this market. But the bottom line is buying a home over time wins for many, many people that do it, gives them options down the road through the equity. And that's not even counting all the non-financial benefits that people buy a home. I think Odetta Cushy said this best, and she said this: if you can find a house that meets your financial expectations for a monthly payment and it's a good time for you to buy, then do that. And if you wait for prices to fall, but they never do, you may discover the hard way that the house you found a year ago that you really loved, that you could afford, but you passed up on, is more expensive next year. And I think that's the bottom line. Certainly local market dynamics are at play and you need to be the expert there. But there are some people on the sidelines going, I'm going to wait till prices fall. And I don't think they're going to see that. Kate went through the expectations of what experts are saying about the 2023 market and really giving that good advice, saying what's most important to you. Let's look at interest rates. Let's look at prices. Let's understand rents. That's our job today, because if we don't do that job, here's what's at stake. And I think Jason Lewis from Parcel said this and said it very, very well. In the absence of trustworthy, up-to-date information, real estate decisions are increasingly being driven by fear, uncertainty, and doubt. And these decisions can be hugely consequential for consumers and for businesses. If we don't get the truth out there, a headline is read or somebody is told something, and it causes them to be fearful, uncertain, and doubt whether they should or they shouldn't buy a home. Our job is to be the educator. Our job is to use tools and resources to educate people on what is actually happening in the housing market, not to try to convince them to do something they don't want to do, but to educate them so they can make the best decision for themselves, for their family, for those that they care about. And I think is now more than ever, this is a critical piece of what we have to do. In a lot of markets, you don't have to do this because everybody's like, I kind of understand what's going on. But there's so many people that deal with so much uncertainty, not only in the economy, but in what we can control, which is the housing market, being educated, delivering our message, and helping people make powerful and confident decisions. Just by listening to the monthly market report, you are doing that. I want to tell you about another resource that is coming out on December 5th, the winter buyer and seller guides. There's probably not a better way to build trust and really to build a relationship than printing these out, getting them in the hands of those that you're working with, leaving them at an open house, leaving them in places where people can grab them, because they are updated every quarter with the most relevant information that somebody thinking about buying a home, thinking about selling their home, that they need to make the best decision. And oh, by the way, if you're the one bringing that, you're already building credibility in their mind. So go and grab those. It comes out on a Monday. It's December 5th. Use those. We hear all the time how people are using these buyer and seller guides to get the message out there and get them in the hands of people that are looking forward to doing things. As always, we are grateful for the time that you invest in the monthly market report. So on behalf of Kate, myself, hope you have a great month, and we'll see you back next month.